Hi guys, welcome to Unisys weekly fundamental analysis. First of all, as usual, we'll look into the dollar. The severe epidemic situation in the US this month increases demand for the US dollar cash. According to reports, although the current month of January has not yet ended, data show that January 2021 has become the month with the most deaths since the outbreak of the COVID-19 in US. In addition, a number of US media also reported on 26th of January that the US had reported the first case of infection with the new COVID-19 variant found in Brazil. This patient is from Minnesota, US, and has recently been to Brazil. The Centers for Disease Control and Prevention stated that the mutated virus has a certain mutation pattern that may make the virus easier to spread. American experts say that the US needs to increase the genetic monitoring to further understand the spread of mutant viruses in the US. US President Biden's fiscal stimulus is slow and unexpected, which is good for the dollar. The market predicts that Biden's final stimulus will be at least US 900 billion. The Senate Majority Leader Chuck Schumer warned that the economic stimulus bill may not be passed within 4 to 6 weeks, and it may not be passed before mid of March, which further confirms the situation that Biden's stimulus plan faces in Congress. The Goldman Sachs has cut the size of stimulus plan that Biden's can finally pass from 1.9 trillion US dollar to 1.1 trillion US dollar, and Andrew Tyler of JP Morgan Chase is even more pessimistic that the final size that can pass is only 900 billion US dollar and may be delayed for an even longer time. And next, we'll look into the Federal. The Fed maintained its easing policy and did not further increase its easing. Okay, so this month, the Fed's chairman Powell was worried about economic risks, but maintained the current easing policy unchanged and did not release the tone of more easing measures. Powell announced that the battle against the COVID-19 has not yet ended, despite concerns that the ultra loose stance will lead to a stock market bubble and excessive inflation. He promised to continue to open the monetary policy faucet to help the economy hit by the epidemic. Furthermore, we're looking to the euro. The European Central Bank officials verbally intervened in the euro exchange rate, trying to pressure the euro. Klasnot, a member of the European Central Bank Management Committee, said that the central bank has the necessary tools to prevent further appreciation of the euro from suppressing inflation prospects. The analysts pointed out that as the euro dollar trading fell below the 6-month average and fell to around 1.21, people may question the timing of ECB's verbal interventions and why the ECB did not maintain its intervention in a more urgent time, especially because you may notice that as long as no practical measures are taken and effective threats such as interest rate cuts are included every time, the marginal impact of each oral intervention will be reduced. Besides, the European Central Bank implements a dovish policy, and the President Lagarde believes that the economic recovery of the Eurozone is delayed. The ECB The ECB President Lagarde said at the World Economic Forum's Davos Agenda Dialogue on 25th that, judging from the economic data in the fourth quarter of last year, the Eurozone's economic recovery has been delayed. Lagarde also said that the Eurozone economy should not deviate from the recovery track. To this end, the fiscal policy still needs to play a leading role while maintaining a proactive monetary policy to ensure favorable financing conditions to support the recovery of all economic sectors in the euro area. So coming up next is the forex calendar for next week. So as usual, for friends who are trading during the news, please set your stop loss and please screenshot this as a reference, as whenever there's news, there will be a lot of movements. So that's all for today. Thanks for watching.